Thank you so much, Nicholas. It's a pleasure to be here, and especially to be here and have, oh, thank you so much, to have this discussion with fellow supranational issuers. And we also have a virtual panelist, so thank you so much. Today you're going to hear the issuer perspective from labeled bond issuers. We have a green bond issuer, a social bond issuer, and a sustainability bond, that's a mouthful, huh? A sustainability bond issuer in the supranational space. So let me just go ahead and introduce the panel. Virtually, we have Modupe Famakinwa. She's the head of corporate funding and investor relations at the African Finance Corporation. We have Arturo Seco Presencio. He's the deputy CFO and head of funding, treasury, and ALM at the Council of Europe Development Bank. And then we have Domenico Nardelli. He's the treasurer of the Asian Infrastructure Investment Bank. So thank you so much for joining us. You've all entered the market at different times with different labels. You each have a unique regional perspective as issuers raising funds to finance investments in Europe, Asia, Africa, including emerging markets. So, before we get into the meat of things, I'd like to ask each of you just to say a few words, maybe a minute, the elevator speech, about your organization's purpose, your issuance program, and what you finance. Because I think these days the issue is not so much will you issue a labeled bond, do you or don't you? I think it's happening. More of the questions are about disclosure, but just tell us a little bit about what you're doing. Maybe we can start with Modupe.
Okay, great. Thank you for having me, and good afternoon, everybody. So I work for African Finance Corporation. AFC is a multilateral finance institution set up as an infrastructure solutions provider to the African continent. Since inception in 2007, we've deployed over $15 billion across 35 African countries. Now, our first foray into the green bond market was in 2020 when we issued our first green bond. We issued it based on ICMA principles, and those use of proceeds were applied to transport and logistic projects, as well as power projects. We continue to watch the market and issue as often as we can, and I'll just pause here. That's my quick pitch.
Thank you so much. Why don't we move over to you, Domenico?
Thanks, Colleen, and hello, everyone. For Asian Infrastructure Investment Bank, entering the market at a different moment means entering the market very recently. The bank was formed at the end of 2015 and started to operate in the beginning of 2016. We have now reached a total book of financing in excess of $30 billion already. The bank has $100 billion in subscribed capital, and our mission, as we summarize it, is we want to finance infrastructure for tomorrow, which means infrastructure that has a lot of component in terms of technology, digital communications. And lastly, Colleen, I will say that it's very relevant to the themes we are discussing today. The bank is extremely focused on climate finance. As a matter of fact, we have a target of reaching 50% of projects brought to approval in 2025. They should be in climate finance. Thank you.
Thank you. And Arturo, your turn.
Yes, thank you, Colleen. Good afternoon, everyone. So, Council of Europe Development Bank is a supranational institution based in Paris. We have 43 country members now, Ukraine becoming the 43rd member state only on June 15th, last June 15th, so probably 10 days ago. And the mission of the institution is social cohesion, promoting social cohesion within Europe, so within the member states, by promoting sustainable projects. For doing so, we do not receive any contribution from those member states. We finance ourselves in the capital markets, and we are financing projects related to 10 different sectors, but mainly housing, health, education, and job creation and preservation. So for doing so, we issue regularly in the capital markets. We have a €7 billion funding program, long-term, out of which social inclusion bonds is one of the main products, and that's the label that we have been chosen because of the mission of the institution, which is social. So it made sense that all bonds in the ESG sphere would be social bonds.
Why don't we stay with you, Arturo? I think a lot has changed in the market since 2017 when you issued your first social bond. Can you say a little bit about how the Council of Europe has adapted to the changes in the market over the last 5 or so years? And like, for example, you recently updated your framework. Maybe you can talk a little bit about what prompted you to do that.
Yeah, sure. Thank you very much for the question. When we started working on the first framework, which was in 2016, it was, well, the idea was to include 3 main sectors, and that time was health, education, housing, and job creation and preservation. So we did not have health at the time. And that was one of the triggers to do our first upgrade of the program in 2022, because with the COVID-19 situation, we wanted to very fastly raise funds related to COVID-19. So the bank put in place a fast track procedure in order to be able to disburse the amounts needed for the COVID-related projects, but we also decided to go out in the market with a social bond related to COVID-19. And for doing so, we had to update the program. So that was a challenge, the update of the program itself, and the lesson learned was that it was feasible to do in a record time. We did it in less than a week, being able to issue a COVID-19 related transaction very fastly, and with a very strong support from the investors communities, both in euros and dollars. So that was the first upgrade, and then we enter into the phase of the Ukraine conflict early last year, and there again was at the time where we were trying to accommodate our reporting to a portfolio approach. So that after long conversations with investors, we felt that it was the right way forward. And we did the second upgrade last year, which has one of the main characteristics, is that gives a lot of flexibility to the issuer in terms of being able to do smaller transactions and having a single report per year rather than a report per transaction. But it's also very interesting for the investors in terms of finding necessary information from a single issuer in a single year. So those have been the 2 updates that we have done. And again, lesson learned here was that things can be changed. If you have a framework, it does not need to be static. As needs change, as the market change, we can upgrade our frameworks. And after having done the first original framework, updates, they can be much more faster than we think at the beginning.
No, thank you so much. I think as issuers, in this space, we realize that we do have to be really nimble and that frameworks do have to change. I think, we as an issuer, you want to put something out into the market, you want to leave it there, you don't want to tinker with it too much, but I think the market is changing so rapidly that we need to be responsive. Let me turn to you, Modupe. I mean, as you said earlier, African Finance Corporation issued their first green bond in 2020. So you're a relatively newer entrant to the label bond market, and you're financing projects in Africa. And as issuers, we're all facing data challenges as new standards or regulations or just expectations are emerging. And in terms of scaling up sustainable finance, emerging markets participation is essential, but there's some challenges there, right? So maybe you can share a bit your perspective on participating in the market as an EM issuer, and tell us a little bit about what those challenges look like for African Finance Corporation.
Okay, thanks for that, Colleen. Now, despite the fact that we issued our first green bond in 2020, we have been issuers in the capital market for quite a while. We have a $5 billion GMTN program. We frequently access the market. However, sustainable finance, labeled bonds, etc., it's in its nascent stages in the African market. AFC likes to be a thought leader. And one of our mandates is also to develop capital markets. And we take that mandate seriously because, part of how we see ourselves developing the markets is by way of our issuances. We found that when we issue, the rest of the African markets tend to follow, right? Our transaction sets examples, etc. However, we do find that in the type of work that we do, there is significant growth and development required with data infrastructure available data transparency. Regulations are still in its very early stages. Corporates that we invest in and projects that we sponsor aren't quite there yet in terms of having data. And of course, as we all know, with the labeled bonds, reporting is a significant part of the process. Now, for us as an institution, we develop infrastructure. Infrastructure has significant impact in terms of any of the sustainability goals that you might check. But the data is just not available, or it's not available in good time. So that's been a significant challenge. That notwithstanding, since we issued our first green bond, we've prepared an impact report every year since then. But the challenge is that's limited to a handful of projects. So say, for instance, we finance about $1.5 to $2 billion of infrastructure annually. Only about 10% or 20% of that will qualify as truly green. The challenge then remains, how do we fund the rest of the asset creation? When you then look at Africa as a whole, the infrastructure gap is large and growing. Depending on what data source you look at, this runs into billions of dollars. And an inability to access this market then limits access the sustainable finance market, limits the amount of capital available to us as a continent. So one of the things that we would like to see happen is, a bit more inclusion, for instance, in the likes of the ICMA principles secretariat. We find that, I think at the last check last week or so, there was no African representation, and this doesn't feed through to the regulations, the rules, the principles, etc. And then we then find that inadvertently, there are barriers to entries created for the rest of the market. We're not saying standards should be lowered. We're just saying, let's think about the context within which we operate. We're trying to build infrastructure projects across 54 countries who have, very different levels of development, different DNA. So having a one-size-fits-all rule, for instance, what we have with the ICME principles, etc., doesn't exactly help to include more people in the market. So I think what we would like to see happen is a lot more ability to access the markets, taking into consideration the context within which we operate. I think data infrastructure is significant. We need to, create awareness. We need to create knowledge. There's a lot of expertise still required to be built. It's work in progress. And I think, a lot of support from the international capital markets in recognizing that will be very helpful to promote inclusion here.
Thank you so much, Modupe. I think, you made a couple of points about, how issuance sets examples, having sort of a peer group where, it's really important for iteration to be able to see what others do so that you can add to that, change that, and of course, context really matters, right? And having standards that are nimble enough to allow space for different kinds of issuers in different contexts, and as you said, not less impactful, but just different, recognizing some of these needs, because we certainly need all of it, right, if we are going to make progress on the Sustainable Development Goals, but also just, not just thinking so broadly like that at national and regional levels. So thank you so much for your perspective. Domenico, if I could turn to you, I think this is a good segue because we're thinking about, AIIB entered the market, you're a relatively newer issuer. You entered a market that already had a good amount of development in terms of standards and examples, and I'm curious about, how did that shape your plans at AIIB, and were there any models that you followed to do so?
In our case, we chose to leverage on the fact that AIIB is a new MDB, so has been around only for a short time and was created with sustainability at the core. So our articles of agreement, number one, actually, the first article of agreement mentions that the bank wants to foster sustainable economic development. So we decided to leverage on this, and we pursued an approach that is based on a holistic concept of AIIB as a sustainable issuer overall. So this, I think, is ties with what in the previous panel Alban Defay from Amundi said in terms of trying to recognize and identify certain issuers as a sustainable issuer rather than specific singled out lines of bonds. So what we did, we created our Sustainable Development Bond Framework, which basically ties very closely to the Sustainable Development Goals of the United Nations, on the premise that that's all we do, that's all the bank does. So we in our processes of financing, we basically follow the principles for green bonds. We are very aligned to those in terms of the screening of the projects, the way that we report, the use of proceeds particularly, which is also reflected in our bond legal documentation. So for those of you in the room who are managing money and could be investors, you don't have to worry when you look at AIIB to screen across different lines of issuance. So all of the bonds issued by AIIB are sustainable bonds. And this is the approach that we pursued. I want to say, Colleen, that in order to do this, reporting is key, because you have to find a way to communicate this to your stakeholders, to your investors, and disseminate high-quality data. And here, the bank also, what we decided was to start publishing an impact report. This is something that also many others, including your institutions, do, which I think is a very powerful and important tool for investors to understand what the issuers are doing in a simple manner, but also based on data, on actual data, and that's important. And it goes into the issue of how you report and what you report. I know we are having a keynote address from Jingtong Hua shortly after this panel. I'm really looking forward to hearing what Jingtong will say. And this, again, I wanted to stress that this is an important measure for MDBs and sustainable issuers.
No, thank you for sure. It absolutely is. I think we heard in a panel before this one that disclosure with labeled bonds is its own form of discipline, right, in terms of accountability. Once you decide to enter this market, you're signing on to this idea of reporting and disclosure. And, you know, we've really moved from this idea of instrument level disclosure really to issuer level, right? The expectation is that you're hearing about the issuer as a whole, not just the labeled bonds. Maybe if I could, since we're talking about reporting, maybe if I could just turn back to you, Modupe, for a moment. I wanted to touch on a little bit what you were saying earlier about the challenges with data and how context matters and it can be different. I wanted to know, like, how is African Finance Corporation communicating impact to investors? And you mentioned you're doing impact reporting. I mean, what should investors consider, or how should they think differently about EM issuers? Maybe using your own example.
Sure, and thanks for that. I think, you know, I'll just pick up on Arturo's point where he mentioned it's not just about the reporting on the label itself, it's about the issue and the overall impact that they have, which is the way we at AFC have approached this. So in our impact report, you're not just going to see information about the amount of emissions that we've been able to reduce or all of that. That's there, but beyond that, we look at the broader impact we have. Because in our view, there are 17 sustainable development goals. There's talk about poverty, financial inclusion, gender equality, healthcare, etc. And we try to include all of those metrics in there. Now, on every project we see, typically you are able to measure, for instance, the basics like jobs created and all of that. We include all of that in our reporting. I think what will be really helpful for us is for investors to move away from the focus on just, for instance, the environment. The environment, we believe, is very important, but, you know, there are also several other metrics that show, you know, we're creating a sustainable future for all, which, you know, ultimately is the underlying objective of all of this. Now, in our report, you'll find all of this information. Now, the challenge we do have with data, though, is though we have an entire portfolio of about $10 billion, on an annual basis, there's probably delays of about 6 to 9 months on about half of that portfolio. So it then makes the reporting a bit less rigorous than we would like. But then again, we have to bear in mind that we're dealing with 54 countries at various levels of development with various conflicting priorities. So for instance, a priority might be provide healthcare, etc. They have limited resources. And then there might then be less of a focus on actually reporting the impact. What we as an institution are trying to do is, for instance, where possible, provide access to information, just educate, these projects. We include it in our funding criteria now that, look, a bare minimum of reporting is required. We're trying to create this awareness and hopefully galvanize a movement. And, hopefully this butterfly effect will take effect over the next few years or so. But we still have to be cognizant of the fact that we're at the early stages and we have to navigate this data availability. To the extent that our investors understand that and understand that overall, the work we do is impactful. It may not look like the type of impact you want. For instance, it might not be all focused on emission reduction, but there are several other sustainable goals being impacted and that are equally important. So I think that would be helpful generally, because for us, we don't want to get to a situation where the much needed capital on the continent is limited because investors are focused on only the environment and are disregarding the social and the governance part of the whole ESG framework.
No, thank you so much. I think these are really important perspectives, right? I mean, I'm leading the impact reporting work at World Bank, and I mean, it is iterative by nature, and every single year we're trying to do something a little bit better, a little different, to incorporate more or different metrics, but of course we work with the data that we have, and so it does take some time to be able to sort of mold that data into what investors want. So I think that this is needs to be an evolving dialogue by its nature. Maybe, Arturo, if we can turn to you, I mean, feel free to, if you want to add anything on sort of this disclosure part as a social bond issuer, social inclusion bond issuer. But the other thing I wanted to ask you, you've been in the market a little bit longer with, as a social bond issuer. I was interested to know, like, what other changes do you see ahead for CEB as the market evolves? And maybe that is around disclosure, I don't know.
Yes, thank you again. Well, we've been in the market around for a while. We issued first a social inclusion bond in 2017, and we have now close to 8 billion outstanding, mainly in euros and dollars. We have a benchmark curve in euros built out of 7-year transactions, and we have a benchmark curve in euros built out of 3-year transactions. But one of the main changes that we have seen in the market is the origin of the demand. So at the very beginning, when we started issuing our social bonds, that was coming mainly from Europe. We see more and more demand now coming from the US and other markets as well, and that has an impact in the way we want to continue executing our transaction. And that was part of it was at the origin of the change of the framework and the last upgrade, because having a portfolio approach, it allows us to be more flexible and be able to satisfy social investors in different and smaller markets. So that's something which is very important about the portfolio approach. And something which is also very interesting is that when we started issuing social bonds, it was mainly about dedicated investors for social portfolios. What we are seeing now more and more is ESG investors being able to invest in both green, social, or even sustainable bonds, which is changing a little bit the way that we're interacting with those investors. So the portfolio approach was not the only aspect about the last update of the framework. It was also the fact that we incorporated wording related to the environmental aspects of our transactions, because we are issuing social bonds, but it does not mean that we forget about the environmental aspect of the eligible project. So every eligible project that we use for those bonds needs to go through environmental screening. The bank is part of the Paris Alignment Agreement, so environmental aspects are also very much taken into account. And I would like to mention also the reporting aspect a little bit, because it's true that with the ongoing regulation changes and well, different taxonomies, we have a framework which is ICMA social bond principles, which allow us to, well, it has allowed for the time being and from the very beginning to create and increase the size of the social bond market. But I think it's a tool that we can still use, and in the meantime, whilst we're waiting for more harmonization among different markets, it's going to be very useful, and we try to continue using it, which means also that communication with the investors needs to be as fluent as ever because of the taxonomy changes. And that implies that we need to be given relevant data where we think that quality is more important than quantity, and transparency and liquidity in the strategy that we are following is for us the key aspect of this dialogue with investors.
No, thank you so much. I really like that point about quality being more important than quantity, because I think the impact reporting as a process is extremely intensive, and as I was saying from my own example, we do this incrementally and we try to improve as we go. Maybe I could turn here and please, the three of you, feel free to chime in. I don't know who wants it. I think this question is interesting. The question is, this has come in from the audience. Some investors are concerned about the credibility of figures reported by issuers in their impact report. So in what ways can an issuer address or bridge this gap? Would anybody like to pick that one up? I think it's a challenging question. Domenico, do you want to try this one?
It's a difficult question because, of course, first of all, we should say that it's not easy to collect this type of data, particularly for development banks who work in complicated jurisdictions. There is also the layer of many of this type of institutions working through intermediaries and third party. So we do a lot of own lending through third party institutions. There is an issue of quality of data. So this is real. This is real. And I think the way to come around this problem is first to agree at sectoral level, and the MDBs definitely should be in the lead here, common methodologies. And the MDBs do have agreed on a common methodology, also in particular, for example, for adherence to Paris alignment. One could ask why it took so long, because Paris alignment, was signed, I think, 2015 or 2016. So why it took 8 years to do that? But I think more coordination and more agreement on commonly shared principles is the way to go.
No, I mean, I think it's just going to take time. I don't think there's lack of will to do these kinds of things. But I would say, and I want to leave. We have 30 seconds, but maybe they'll give us a minute more. I think it's just a matter of, I think it will come with time. But I wanted to turn it back to each of you to see if you had any last words. Is there something that, I failed to ask you, something that you wanted to share? I think because we're all interested in growing the market and retaining the credibility of the market, but maybe you have a few last words you wanted to offer before we close. Modupe, do you want to share anything additional?
Yes, I think, what I want to leave here with is sustainable finance is all about ultimately creating a sustainable future for all. So I think ultimately we need to keep that in focus and not lose sight of that. If we do that, it then changes the way as investors, for instance, the market is approached, because ultimately you're not just looking at the label, but you're looking at the impact it has. And this impact varies, and it doesn't look the same way in different regions of the world. So for instance, in Africa, there's largely an energy deficiency, right? And so emissions, etc., are probably not, the most important goal. But then reducing poverty, providing healthcare, and other social things are probably more critical. So if investors can just, look ultimately across the entire spectrum rather than just being focused on one, sustainable finance shouldn't be a one size fits all. It should vary by region, and context is important. Thank you.
No, thank you so much. Arturo, did you want to share last 20, 30 seconds?
Sure, thank you very much. Just maybe to stress the importance of what we call the social environmental nexus, because at the end of the day, many of the projects that we are, different institutions financing, from both supranational institutions, public sector, corporates, even financials, they have both components. So I think this is something to be something of relevance that needs to be taken into account. Yeah.
No, thank you all very much.
Thank you.